Ladies and gentlemen, good day and welcome to Camlin Fine Sciences Limited Q3 FY22 earnings conference call hosted by Sunidhi Securities and Finance Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rohit Sinha from Sunidhi Securities and Finance. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. On behalf of Sunidhi Securities, I welcome all participants to the Q3 FY22 earnings conference call of Camlin Fine Sciences Limited. We would like to thank the management for giving us this opportunity to host this call. From the management of Camlin Fine, we have with us today Mr. Ashish Dandekar, Chairman and Managing Director of Camlin Fine, Mr. Nirmal Momaya, Managing Director, and Mr. Santosh Parab, the CFO of the company. Without further ado, I would like to hand over the floor to Mr. Ashish Dandekar for his opening remarks, after which we will open the floor for Q&A round. Over to you, sir.
Thank you. Thank you, Rohit. A warm welcome to you all, ladies and gentlemen, to this con call. As you can see from our published numbers, we are well on the way to the strategy that we embarked on about 5-6 years back, and we are solidly on the path. We have had some hiccups and some delays, but all of them are behind us now. And as you can see, the numbers have started showing it. So we are quite excited about the way forward. And as is our usual practice, I will ensure that I hand over it to Santosh, who will give you the salient features, and then Nirmal is there to answer your queries. Thank you very much for being here. Santosh, over to you.
Yeah. Thanks, Ashish. Good afternoon, everybody. Of course, as Ashish said, it has been a tumultuous roller coaster ride, both on the numbers as well as on the environment here. The early part of the quarter was showing green shoots with pandemic slowing down, economies opening, inflationary trends in cost also stabilizing a bit. However, the quarter, as you know, is ended with the fear of another viral wave, which by now seems to be ebbing. Rising costs again due to spike in the crude very recently, and of course the volatile situation in some of the countries in Europe. Despite this, we remain positive about the business. Of course, we will say this with a word of caution. Without taking much time, I would present the highlights of Q3 ending December 31, 2021. I guess you had an opportunity to look at the unaudited financial results as well as our presentation for the results, which we have uploaded on our site and also on stock exchanges. We are glad to inform that we have recorded the highest ever turnover in this quarter, both at standalone and console level. Standalone was 200.22 crores, while the console was 380.82 crores. Consolidated quarterly EBITDA, PAT and PBT for consolidated are also highest ever. Consolidated gross margin has improved by 166 basis points over last quarter. This is in spite of sustained high raw material costs and also the logistics cost in this quarter. Consolidated operational EBITDA margin was at 14.5%, almost 700 plus basis points improvement as compared to last quarter. In the real terms, our consolidated operational EBITDA was at INR 55.17 crores as against INR 22.17 crore in the last quarter. The increase in margins was primarily fueled by impressive revenue growth across all product lines and stabilization of diphenol plant in Dahej. This is despite an one-time expenditure in the current quarter of 3.98 crore on account of reversal of the export benefit under EMEA scheme, which was withdrawn by the government in this quarter. Consolidated PAT has also improved from a loss of 3.88 crore in the last quarter to a high positive PAT of 27.15 crores in this quarter. At standalone, gross margins have improved by 295 basis points to 40.6%, while the operational EBITDA has also improved by 873 basis points to 11.6%. The standalone EBITDA in real terms was 23.13 crore, which is highest ever quarterly operational EBITDA. PAT turned positive to 12.38 crore from negative 10.15 crores last quarter. Overall, for the 9 months, the current PAT has recouped the last 2 quarters' loss, and now it stands at 14 crores positive. Let me now update you on the status of the legal case against our partner of vanillin manufacturing subsidiary in China. As informed in the last quarter, the review petition was heard by the Supreme Court of China in the month of October 21. We are awaiting the final order of the court, which seems to have been delayed due to the pandemic situation in Beijing and Shanghai. Though the timelines would not be determined as such at this moment, we are envisaging the receipt of order before the end of this financial year. The Chinese plant remains closed till then. Our capex program remains on track. The construction of ethyl vanillin methylvanillin at Dahej, as envisaged, would achieve mechanical completion by end of this financial year, that is March 22. We are targeting attaining commercial production in and around June-July 2022. We are augmenting stock of catechol to brace for ethyl and methylvanillin plant. We are confident of managing capital needs for the same without any additional external support. The positive impact of catechol will get reflected on commercial production of methylvanillin in FY23. Company is also continuing its mission on increasing value-added downstream, which would fructify in the coming quarters. During the quarter, company, as you know, and which was declared also, has completed the acquisition of minority of subsidiary in Mexico, Resen Química. Company now holds 98.5% of the subsidiary. This will further strengthen the returns to the owners. Company also completed the acquisition of Algal Nutraforms, whereby it has now become 80% subsidiary of the group. It is an exciting business opportunity, and we'll talk about it more and more in the future quarters. Discussions with Lockheed Martin are progressing well on the supply of proprietary chemical of battery storage systems, with a view for commercial supply in financial year 24. We will be sharing more information on it in coming quarters. As you would have read in our financial statement, there is a note on National Green Tribunal. National Green Tribunal on January 24, 2022 has revised the compensation levied for environmental impact on near the Tarapur MIDC from 15 crores to 17 crores. The addition is unfair and unlawful. We have initiated process or legal action against it. At this juncture, we do not foresee any cash flow out on the matter, and we are confident that this compensation order will be reversed. Now, briefly on the operations of our subsidiary, CFS Europe, as you know, which manufactures diphenol, has posted a turnover of 87 crores during this quarter, which is after an annual maintenance shutdown of few weeks during this quarter. So, in spite of a shutdown for annual maintenance, which is a routine feature, we have posted 87 crores. CFS Mexico clocked the highest ever turnover of 91 crores in this quarter and is expected to continue its impressive performance. CFS Brazil and CFS North America with turnover of 22 crores and 13 crores respectively are expected to improve their performance in the future quarter. Overall, the look remains positive in all verticals. Of course, the third wave of the continued inflationary trend in crude prices, logistical costs should not be a dampener. Lastly, would request you all to keep wearing masks, get vaccinated, and take care of your health. We will now open the floor for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Susmit Patodia from Motilal Oswal Asset Management. Please go ahead.
Hi, congratulations on a great set of numbers. And I wanted to, if you could, you probably have spoken about Lockheed Martin starting in FY24 for the first time. So just wanted to understand what would be the milestones leading up to that, this batch, the sample batch, the commencement of construction. If you can just help us understand that in more detail.
The milestone really is
Lockheed is finalizing their first commercial orders with their customers, and as soon as those are done, correspondingly orders will be placed on us. This is in advance of the plant that we are setting up. This will be these batches will be carried out, or this supplies will be carried out from our existing facilities between Tarapur, Khopoli, and Dahej. So we expect the business to start from FY24. The plant, the 1,500 metric ton plant program should get finalized in the first half of this of FY23, and to be commercialized by end of FY24. So that's where we are as far as Lockheed is concerned.
So, sir, is it fair to say that whatever trial batch you had sent, that has now got approved and you are officially the partner? Is that?
Yeah, we've always been, actually. Since 2017 we've been that. Yeah.
Okay. Thank you so much, and all the best.
Thanks.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah, thank you for this. And thank you for taking my questions. And congratulations for the good set of numbers. I think we have delivered strong set of the best ever kind of revenue and profit this quarter. But in terms of the margins, if you can share, if I see the trend, let's say the gross margins, which earlier used to be in the range of 50% or slightly better than that. But in the last couple of quarters, we have seen it is in the range of 44 to 45, 46 in that range. So is it led by any one-off thing, or in the prevailing kind of price challenges what we are seeing, or it is because of the catechol issue that what we have been seeing possibly, because there is no vanilla conversion to vanilla and hence deposition of the catechol. So could you clarify here, and how should we really look at the gross margin scenario going ahead, sir?
So yeah, it's you're right that the major impact has been because of catechol, since we've not been converting it to vanillin, which has impacted the gross margin. On the hydroquinone side, whatever the cost increases we faced in the last few quarters, we've been able to pass it on with a lag, and we expect and believe that is something that we can continue to pass on. It's only the catechol which is impacting the margin, and with vanillin plant now nearing completion, we are expecting that we should be back to the gross margin that we used to have at that point of time when our plant in China was functioning. The vanillin market yet remains very strong. The prices are extremely attractive at this point of time, and we expect our entry into the vanillin market during during this financial year should give us the improvement in margin, gross margin that we've seen an erosion of.
Okay. Whether the margin scenarios would be meaningfully different than the historical trends, because why I'm saying this, obviously this margin scenario for the conversion into vanillin, that was not great whenever the China operation was on, but and the vanilla pricing were also significantly lower, and considering the much superior pricing condition prevailing currently, and most probably possibly will be better only going ahead compared to the historical trend. So and our this vanilla site, which is a integrated one, so that possibly will offer a meaningful better margin compared to the earlier vanilla operation, means the earlier margin what the vanilla operation was offering. That is one. And the full optimal utilization of this Dahej plant. Considering these two things, should we see a kind of meaningfully different number in terms of gross margins?
I mean, yes, with a word of caution that yes, that it's subject to what the vanilla prices would settle down at. Currently, of course, they are historically they used to be $10 to $12, and now they are at almost 3 times that. We do expect that that with our supply, the prices should stabilize and rationalize. But yes, our expectation is it would be much higher than what used to be, in the past, and the pricing that was there traditionally. The pricing would remain higher, and yes, that impact positively the gross margin.
Okay. Then, sir, can you update us about the vanilla plant commissioning? Where are we currently, and what is the stage of this setup progress, and when exactly that we are likely to see the commercial benefit out of it?
So, basically, our commercial production should start between June, July of 22. We expect the trial production to start sometime in April. So, it takes time to qualify with the customers the product from trial batches. So, keeping that in mind, the time lag that it takes to get those approvals, I think June, July is a fair estimate for commercial production to start.
So the customer valid. Hello.
Hello.
Yeah, that customer validation, when you mention, will that be a kind of a time-consuming one? It would be like a couple of quarters or a year kind of thing, or how would that be?
It typically is a 2-3 month process.
Okay. And my next question is on the stake consolidation, what you have achieved in the Dresden subsidiary. So after that, what is your game plan for the blends operation? I think that was one of the greater contributor to the blends operation. Now you are almost like full ownership there. So any thought on that side progressively?
So we continue to grow in those markets. We are expanding our reach in the Central America market, as well as Latin American markets by opening new countries with our own sales network. And we continue to focus on new product lines for both animal feed as well as for food. So we expect that, we continue to grow the blends business at, the 20-25% a year going forward.
Okay. Just last one question, if I. So you have been working on various things like the fermentation-based products. You have been talking about this emulsifiers and new assets also, new product basket that you have been talking about. So largely targeting the food and feed segments. So any progress on that? And let's say, since these are like new initiatives possibly, so at least 3 years down the line, what is what expectation that one should really have from Camlin?
So, on the food ingredients and feed ingredients, apart from the blend, we are working on several product lines and products, which we are at different stages of development or commercialization, including our fermentation business and some other products. Our estimate is that going forward, these food ingredients that we are in the process of executing, in the next three years, we should be targeting at least a top line of between 250 to 300 crores.
But will that be different? Will that offer different margin profile, or how is that?
So here in this, the capexes are much lower, so the asset turns will be much higher than what we have in our traditional diphenol and its downstream businesses. So we expect that a 30-40 crore kind of investment will give us a 300 to 400 crore kind of top line. Capex would give us that kind of top line. And these are asset-light products, more on technical application and more on really the expertise that we have on our application side with our application laboratories and technical support staff. So we kind of expect that the margins will be quite healthy in these products, and also since it's not a very capex heavy business, the kind of returns it will give will be significantly better than what we have in our traditional chemical synthesis business.
Okay. Sure, sir. Thank you. Wish you all the best.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Dhruv Shah from Ambika Fincam Consultants. Please go ahead.
Yeah, hi. Congratulations on a really good set of numbers. I have one question on TBHQ. Your competitor commented yesterday that they are getting into this. Is the market large enough for both the large players to exist, or will that impact our sales?
I mean, market is about 5,000-6,000 tons, between 5,000 and 6,000 tons globally annually. And we cater, our market share would be roughly about 4,000 tons out of that. For a new entrant to come, I mean, yeah, surely somebody can come, but to be fully integrated with hydroquinone and with the backward upstream also under our control, it's kind of a little difficult to remain very profitable for a newcomer who's buying hydroquinone and doesn't have the upstream capacity. It always is challenging on the margin side, because to buy merchant hydroquinone and convert to TBHQ, the margins are very limited in that.
Okay. So I just have one follow-up question on that. He even mentioned that HQ and catechol is easily available in the market. Is that so? And if so, what will be the spread between what we sell it and what if we buy it and we sell it?
Catechol is freely available because we are selling it in the market, as we don't have vanillin. But once vanillin plant starts, catechol also will go into. Really, there are two big producers, Solvay and us, and we won't be selling, and Solvay also will has a restricted amount of sales. So catechol end use is very limited. So any which ways, that's never an issue. It's hydroquinone. Hydroquinone is in short supply. It's very short right now, and we expect it to remain short for some period of time, as there are new markets that are opening up for hydroquinone consumption, newer capacities for acrylates and acrylic acid that are coming up in countries like India, Asia, China, and other parts of the world where the consumption of hydroquinone is going up. So we expect the hydroquinone situation to be tight.
Okay. So that should help us, right? And even because we were considering downstream from HQ, but considering the spread in HQ itself, we might reconsider that.
No, but we will go with the downstream. Wherever there is an additional margin in the downstream, of course, we will continue to do that.
Okay. Understood. Understood. And thank you so much.
Thanks.
Thank you. Participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is on the line of Ravi Mehta from Deep Financial Consultants. Please go ahead.
Yeah, hi. Thanks for the opportunity. Congrats on good set of numbers. Just one question on the trade sales have also grown substantially in this quarter. So we are anyways a big market share holders in this segment. So how are we able to sell? Is it price-driven growth or some color on that?
No, see, basically, it's the strength of our upstream of hydroquinone, because hydroquinone is short in the market, and since our capacity came in time, we are able to gather and gain market share, because our competitors don't really have access to enough hydroquinone. So it's not price driven. We're not discounting anything, we're not undercutting anyone, but it's purely because of the hydroquinone situation.
The line for the participant dropped. We move on to the next participant. The next question is from the line of Hemant Shah. Please go ahead.
Yeah, thank you for the opportunity. In terms of key goalposts that you would, want to benchmark in the current year, given that the hedge is stabilizing and more than stabilizing rather, what are the critical things we would want to? So when does the catechol get converted to aniline and, some of these other goalposts that you would want to achieve in the current year, if you can just outline those.
So, vanillin is the biggest one. So for this year, and we expect by June, July, we should be in commercial production for vanillin. So that I would say is one of our main goalposts. And then we also have other products that in the food ingredients and feed ingredient space that I mentioned earlier. There are about 5 or 6 products which we will be launching in the very much immediate future, and to scale those up to a certain level is a key goalpost for this year.
Correct. And secondly, what would be the capex for next 2 years? Within that, what would be our maintenance capex look like?
Yeah. So, I mean, once our vanillin is done, we are looking at about between, I would say typically the capex would be between 60 to 100 crores, not more than that annually.
Sorry, how much?
60 to 100 crores.
Okay.
Maximum would be 100. It would be, in the range of 60 to 80.
Okay. And overall, with the CFSs, also, all the overseas also kind of come to their potential. What would be the critical things you would be looking at least from those geographies?
So in North America, and the one good breakthrough that we've got now is in the pet food market, which is what we were working towards for the last 4 years, and ultimately we've actually been able to make a substantial breakthrough in that market. So I think the next 12 to 24 months will be to gain market share in North America in the pet food segment. It's a substantially large market. It's almost the universe is almost close to $100 million. So we have a long way to go in that. Of course, we're very small, but that's really something that we are going to push for in North America. In Central America, which is Mexico and neighboring countries, we already are well established with most of the large consumers in whether it's in animal feed, whether it's poultry or swine. And also on the food side, we are well established. So we are expanding our portfolio of products into those customers, as well as geographically we are getting into Ecuador, which is a big goalpost for us this year, which is one of the largest aqua markets, which is shrimp and that segment of the market. So that's going to be a focus growth area for us. And in Brazil, it's the animal feed business where we've kind of restructured our team and now have strengthened our team in the animal feed market. And the focus will be to launch and introduce all the products that we have in the animal feed portfolio in Mexico and India, and actually take that to market in Brazil. So these are largely our goalposts there. In India, we have also expanding our footprint on the animal feed side. We have got into the aqua feed market, as well as establishing ourselves across the country on poultry and dairy. So that's also a big focus area for us in this year. As well as in the Asian markets, Southeast Asia, we are focusing on Vietnam and Malaysia and Thailand. These are the 3 markets that we are focusing on in the next 12 months, where we expect to make breakthroughs in the animal feed side. So yeah, broadly, this is the kind of thing for the next 12 months.
Right. And 2 quick questions, if you can allow. First is, do you anticipate any further, adverse impact from the environmental for our New Bombay plant?
No, so there what we have done is we've actually reached a very advanced stage of getting into zero discharge. So by end of the year or April 22, we should be in a ZLD situation. So once we've reached a ZLD, there is no risk of any environmental issues. Yeah.
But the order was supposed to be for the priori events rather than post factor.
Yeah, so all the priority events were covered by that order. So in that sense, there's nothing beyond that, which is.
Okay. So worst come worst, there could be a 4-5 crore adverse impact, just in case.
Difficult to say, but I mean, we don't expect really because, originally it was 5 crores. We went to Supreme Court. Supreme Court sent it back and they unilaterally increased it to 17, which doesn't make sense. So anyway, we're working legally, what we can do, but we don't anticipate a very substantial kind of event there.
Sure. And if one takes a few years ago and a few years in tandem, then our gross margins were much higher. In your opinion, in this current year, would we be closer to that? And in terms of pass-through of raw materials, which has been a lag for most of the chemical guys. So
no, I explained earlier about the catechol to vanillin, and then we will be back to that. And pass-through for hydroquinone, we've already done that. So it's only a question of now catechol. Once we have vanillin, we'll be able to do that. So we come back to the margins as we were earlier.
Right, because there is still a substantial gap there. So
yeah, there's about 7-8% gross margin. Yeah.
Okay.
Yeah.
Thank you. All the very best, and thank you for answering.
Thank you very much. Participants, you may press star and 1 to ask a question. The next question is from the line of Amar Moria from Alpha Equity Advisors. Please go ahead.
Hi, sir. Thanks a lot for the opportunity. Sir, couple of questions from my side. Number one is, sir, as you indicated, in North America, we got a good breakthrough. So basically wanted to understand, we were talking about getting a lot of new orders in North America, probably, 3-4 quarters back. So is that the same kind of breakthrough, or this is something new which we got luck up with?
No, it's the same thing that we were expecting 3-4 quarters ago. Because of the pandemic, it all got shifted. So now with personal meetings have opened up, and the US is far more open than most parts of the world. So that's where we are getting traction now.
Okay. So let's say, sir, as you indicated that universe is very large, and I'm sure we would have got a large client base, a large clientele order over there. So what kind of the run rate we can see in next 4 quarters from where the US today?
So we expect by the end of the 4th quarter, we should be in a situation where we will be above break-even, for sure. That's the
above break-even.
Yeah.
Above break-even, when you say above break-even, that is in the 4th quarter of 22, correct?
Right. On a run rate.
Okay. And when we will be when will become profitable in US?
I think next year is our expectation. Yeah. FY24, we should be making money there. Yeah.
FY24.
Yeah.
So basically, when you say that you will reach to break even in Q4, so FY23 will just maintain the break even situation there, or will make some profit also?
No, FY23 I'm saying will be at break even, and FY24.
FY24 will be the profitable year for us.
Yeah.
So, sir, ultimately, US is a large geography and we were targeting it from long period of time. Let's say, what would be the contribution of US to the overall revenue in FY24?
No, that will be not very large. Yeah. The total revenue, it won't be very large. Yeah.
Okay.
It will be probably 5%, 7%, nothing more than that.
Okay. And secondly, sir, about this China issue, the plant, I believe, is still closed there. So what would be the solution for that? Will you be getting the opportunity to get those machineries here in India, or what we will do with that investment there?
No, there we are converting that into another product called heliotropin. And we have already applied for environmental clearance, which we expect in the next few months it will come. And once that comes and the court order is passed, and we can then convert it to that product, which is a nice and again catechol based product. Market price being $25-30, so decent margin. So that's the idea, is to convert that facility into another downstream of catechol.
Okay, but then we will not be able to produce vanillin there.
No, because the Dahej is far more competitive. It's all integrated, and we'd rather focus on Dahej for vanillin, and because that's where our maximum margins will be. So we don't want a higher cost product to compete with our low cost product.
Okay. And sir, vanillin, just to understand, vanillin, the total investment was around 250 crore, right? Or 150 crore?
250.
250. And this will bring at least 2 times sweat asset ratio?
Yeah. So, at today's prices of vanillin, it looks silly, but it's huge. But even if it's stabilizing at $20 and you're talking about 6,000 tons, you're talking about 700-800 crores of top line at peak.
Okay. And this will be a similar margin business, like what company average kind of a margin, or higher margin business?
So this will be slightly higher than what we have today at current cost and current prices of vanillin. So I don't know what will happen to the prices of vanillin, but if they remain where they are or what we expect it to be, it will be better margin than what we have today.
Okay. And sir, your plant of MEHQ, I believe it is ready, and we were looking to do some expansion there as well. So any plans there?
So right now, MEHQ from hydroquinone, it is better to sell hydroquinone. You make a better margin selling hydroquinone and then selling MEHQ. So we're not converting it to MEHQ because it doesn't make sense. Alternatively, we can make MEHQ from an alternative route, which is from anisole, and we are in the process of understanding whether we should go that route or should we see what happens to hydroquinone prices as we go along. So it's something that we are working on. We've not yet firmed up exactly what we want to do.
Okay. Perfect, sir. I'll come back in queue. Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Nirali Gopani from Unique Asset Management. Please go ahead.
Hello, sir. Thank you for the opportunity. Sir, my question is on the Lockheed Martin deal. So if I understand correct, we'll be supplying roughly 600 tons of material to them by December 2023, right?
Yeah.
And this will be from all our existing capacity and will not need any further capex for this capacity at least. And what kind of revenue can this capacity generate, the 600 tons?
Difficult to say as of now because we are yet in the process of trying to finalize that. Yeah. But it's not going to be significant in the scheme of things of what we are doing.
Right. And so just 2 quarters back, like in Q1, we were expecting vanillin capacity to generate 400 crores of revenue. And today we are saying 700-800 crores. So this is just based on the price volatile.
No, that's at the peak. We said 400 crores would be at 70%, and at peak it will be 700 crores.
Okay. Will it take 2 years to achieve this optimum utilization?
Yeah, at least.
Right. And also we had this EBITDA margin aspiration of 17 to 20%. So once the raw material issue is resolved, the freight costs normalize, and vanillin comes into the picture, can we achieve that kind of margin?
Yeah, that's right. As soon as vanillin starts, we'll be in that range.
Great, sir. And sir, any guidance that you would like to give for revenue growth over the next 2-3 years?
So, revenue growth, we'll add about 600-700 crores of vanillin, and on the blend side, we will add about 20-25% annually. And some new products that we spoke about, the food ingredients, feed ingredients, we'll add in the next 3 years another at least 200-300 crores. So you put all of that together, we should be adding at least about 1,300-1,400 crores in the next 3 years.
Perfect, sir. Thanks a lot, sir. Thank you.
Thank you very much. Participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Arpit Shah, individual investor. Please go ahead.
Yeah, thank you for giving me the opportunity and congratulations for a very good set of numbers. I just have just two questions regarding the pricing with clients. Just want to know whether it's been done quarterly basis or yearly basis. And
it's all quarterly now.
It's all quarterly basis.
Yeah,
okay.
Nobody's now doing any annual contracts just because of the way the market is.
Okay. And just another question that we directly deal with the clients or through the distributors, and what would the proportion between it?
I would say 70% of our business will be direct, 30 would be through distributors.
Okay, 70 is direct and 30
70 to 80, but a very small part of our business is distributor driven.
Okay, sir. Thanks. That's it from my side. All the best.
Thank you very much. Participants, you may press star and 1 to ask a question. The next question is from the line of Shivaji Mehta, individual investor. Please go ahead.
Hi, thank you for this opportunity. Just one question, which was as regard to one of the previous participants. So you had mentioned you want to add 1,400 crores in additional top line in the next 3 years. So this, just to confirm on the number, this will be about 2,500 crores by FY25. Is that right?
Yeah.
Right. That's all from my side. Thank you.
Thank you. The next question is from the line of Amar Mourya from AlfAccurate Advisors. Please go ahead.
Yeah. So thanks a lot for the opportunity again. Just wanted to understand in this vanillin, how you would be expecting. I believe vanillin will come in the first quarter. So what kind of utilization we can expect for the full year of FY23?
The commercial production will come Q2. I think we probably, of the total 6,000, we probably get 9 months of. We should be doing about 2,000, around 2,000, 2,200, 2,400, that range.
Okay.
So, say $20. If you take average, $20, you're talking about 40 to 50 million dollars. Yeah.
Okay. So kind of a 40% kind of a utilization for the first year.
Yeah.
And what would be the utilization for the after that? I believe by the time your trial and everything would be done with the client and all.
No, so next year we should take up our utilization to 80%.
Yeah. 80% utilization.
Yeah.
Okay. And sir, when you say that we are targeting 13 to 1400 crore revenue, so I believe you are counting 800 crore or 700 crore from the vanillin, and then the remaining 500-600 crore is largely, you are saying the blends, right? The pet food business.
And some new products that we are working on.
Okay, those are the natural root products.
Natural fermentation, other chemical products also in the food ingredient and feed ingredient space.
Okay, but then for that we have to do some investments also?
That's why I said about 30-40 crores will be the capex and little more some other ancillary investment, and that should give us a top opportunity for a top line of almost about 300 crores.
Okay. Got that. Thank you, sir.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Ravi Mehta from the Financial Consultants. Please go ahead.
Yeah, hi. Thanks for the follow-up. Just wanted to know that the 4-week shutdown we took in Italy, So during such a ramp down and ramp up, are there yield destructions or just wanted to understand whether the gross margins can be even better or it was just a normal thing?
It's a normal annual shutdown. I mean, yeah, the yields do get, but that's very limited. I mean, for a couple of days. So it's not, it evens out over a period of 60 days, you know. So it won't really impact too much.
Okay, okay. And also another question I had was this ethanol blending becoming a big thing in India. So are there any antioxidants or blends that can be addressed to this market, or are we working towards this?
No, not for ethanol. Ethanol does not require antioxidants. It's the biodiesel which requires antioxidants. So if it is vegetable oil based or animal fat based, those are the ones which require antioxidants. Ethanol on its own is a very stable product. So we don't see too much of a opportunity in the ethanol blended fuels.
Okay. And one more question was on the utility cost. So most of the companies did see a big spike in Q3. Somehow you guys have managed it really well. So anything different we are doing, or some long-term contracts or some benefit we are getting, if you can share?
No, we also got hit by coal prices going up, yeah.
Then probably I think you had levers of other cost rationalization because your costs were pretty stable.
Stable, yeah. But yeah, because power and fuel actually did go up in the quarter by almost, I think, 5 crores. But yeah, the other costs correspondingly have come down. So kind of.
And
but yeah,
sustainable cost rationalizations.
Yeah. Hmm?
These cost rationalization are sustainable, like, or it was just kind of one of you tried doing it in this quarter?
No. The last quarter there was, because of the aberration, there were some costs which were, there was some one-time costs, and costs were bloated because of fixed costs being higher. So that's what.
Okay. Yeah, sure. Thanks.
Thank you. The next question is from line of Susmit from Motilal Oswal Asset Management. Please go ahead.
Thanks for the opportunity again. Two small questions. One is on your debt. Now that your majority of the capex with Camlin will be done, is there a plan to become debt free in the next 2-3 years as well? Any thoughts on that?
Not really debt free, but of course we'll bring down the net debt for sure as we go along. Partly, of course, some conversions of IFC are expected and some repayments. Of course, we continue to repay. So the idea is to reduce the debt as much as we can, but there's no plan to make it debt free in the next 2 years. It will probably take a little longer.
Okay. And the second thing, just this whole additional 1,200-1,300 crores of revenue, this does not include Lockheed, correct?
No, it does not include Lockheed.
Okay. Thank you. Thank you so much.
Thank you. The next question is from the line of Rohit Sinha from Sunidhi Securities and Finance. Please go ahead.
Yeah, thank you for taking my question. Sir, just wanted to understand, I mean, as you indicated that for China, we'll be looking to convert it to make something different. New product would be there. So just wanted to understand two things. One, after getting the, let's say, environmental clearance, what would be the timeline to do all those conversion, and how much cost would be there overall, and possibly if you can quantify any kind of asset turn on that.
So basically, the additional cost will not be substantial because the plant is more or less very similar to the vanillin facility. So there'll be some bridging capex. It will not be significant. From the time we get approval to restart as well as the environmental clearance, it's about 3 months to modify the plant, not more than that. Very small modifications are required.
Okay. So by when we can expect revenue contribution from that facility?
So environment clearance is about 4 months, is what we understand. So another 3 months. So by the end of the year, we should be ready with the facility.
Okay. Okay. And by the time, would there be cost incurring in that facility?
There is some small cost that they're incurring, yeah. But it's very small.
Okay. Okay. And sir, just wanted to understand two things on the subsidiary side. I mean, the geography-wise, our exposure. So, as you are saying, Ecuador is the next target for us. So, that would be, on the top line side, what would be the potential there, maybe after getting into the market in some time? And secondly, how this Mexico growth you should be looking going forward, as now.
Ecuador comes under Mexico. So when we say Mexico, it doesn't mean only Mexico. It means all these countries around, and that's where we are saying that the 20% to 25% growth in Mexico will be largely driven by countries like Ecuador and new product launches in the existing markets.
Okay. Okay. So I mean, we will keep on exploring new region as well. And that would be bringing the growth in Mexico.
Yeah.
And possibly exploring new regions. Would that dent any? There would be any dent in our margin, or it would remain in these range? I mean, overall the Mexico
It remain in the same similar range because there's no real investment. It's only sales people, so which is not so bad.
Okay. That's it from my side, sir. Thank you.
Thank you very much. As there are no further questions, I now hand the conference over to the management for closing comments.
Thank you. Thank you. Thank you very much, ladies and gentlemen, for participating in the call, and we look forward to interacting with you again in the next quarter's results. Thank you, and be safe till then.
Thank you very much. On behalf of Sunidhi Securities and Finance, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.